Hey, it's Similolu here, and in this video, how to use stop loss and OCO orders for beginners, I'm going to go over everything you need to know in order to trade like a pro. Now, trading like a pro simply means you're able to manage your risk. Once you can manage your risk, then making a profit on most of your trades isn't that difficult. One of the most common questions I get asked on my Telegram group is how to set a stop loss. So that's what I'm going over in this video. Whether you trade cryptocurrency, shares, futures, or the Forex market, you need to know how to set your stop loss. So without further ado, let's get right into it. So here I am on the BNB BTC chart. It's a daily chart. And I'm going to pick up some BNB, and I only need about half of a BNB coin, and I'll click on this and that should get it for me. It'll give me an order confirmation screen, and yes, that's what I want to do right now. I can check on that by going to my trade history. And looking at my trade history, it's purchased half of my BNB coin in 5 separate purchases, which works fine. So now I have BNB coin. So now that I've purchased my BNB coins, I want to set a stop loss so that in the event that the market begins to downtrend, then my stop loss will ensure that I don't lose more than what I set. So I'm going to set it right now. So let's go over to sell. And over here we have the stop limit. So if we click on it, we can set a stop limit. So I'm going to set it up as a stop limit and as an OCO order. I'll sell half of my coin using a stop limit, and I'll sell the other half using an OCO order. So I want to ensure that I don't lose more than 5% of my coin. So I'm going to do some calculations and call up my calculator. Now looking at my trade history, I can see the price at which I bought BNB. So on average, I bought it at 0.0049. I want to ensure that if the price of BNB falls 5% below 0.049, then I want my stop loss to trigger and exit me from the trade. So the price at which I want my BNB coin to be sold is 0.04655. So I'm going to set my stop price just before the limit price. So it's going to be a figure higher than my limit price. And then lastly, I'm going to set how much of my BNB I want to sell. I'll click on the sell BNB, And it always comes up with the order confirmation, and it's always important to go over it to make sure exactly what you want to do is what you've set up. And here it explains what I've just done. It says if the last price drops to or below 0.004665 BTC, an order to sell this amount of BNB at a price of 4655 will be placed. So what this is saying is, by the time I click confirm, it's not actually going to set that stop limit order or the stop loss. It's only going to set it once price action comes down to this stop price. So we'll click confirm. And so we can check on it under open orders. So you can see it's not actually going to be under trade history because the sell order, the stop loss, has not actually gone through, but it's going to be under open orders. And when we look under open orders, there it is. And this is the condition under which this stop order will be actually created. So the second thing I'm going to do is I'm going to set up an OCO order. And with an OCO order, it gives me the opportunity to set a take profit as well as a stop loss. In the first box, I'm going to put that price at which I want my BNB to be sold at a profit. So again, if I want to set it up in an automated fashion, then an OCO order is what does it for you. It's always a good idea to have a plan before you go into a trade so you understand exactly what you're expecting from that trade. Now for my take profit, I would want to see a 15% profit. So I will set my price up here to 15% more than the price at which I purchased the BNB coin for. So the price at which I purchased was 0.0049, and I'm going to calculate a 15% increase on this figure. So here's my calculator, and let's do 15% increase on this figure, so 0.0498. And I want a 15% increase, so I'm going to multiply this by 1.15. So this is the price at which I want to take profit. I'm going to enter it in this first box. And then I'm going to enter the same figures for the stop limit order that I set, which would be my stop loss. And here it is. So the stop figure I said before is this figure here. And then the actual sell point is this figure here. I want to sell 0.25 there. Okay, that message says something is wrong with this figure. So let's make sure we've got it right. 0.00, okay. And there it creates our order and it places it right in here again. So with our OCO order, it sets up two separate orders. Because what the OCO order is saying, if price action goes up, then we're going to sell at a profit. If price action goes down, then we're going to sell at a loss. So there are two separate orders. The top two orders, this one at the bottom is the stop loss we created earlier. And the OCO creates these top two orders. The limit maker, that's this order, this one gives us our take profit and is going to trigger once price action is 15% above the price at which I entered into the trade. And the second order is going to trigger once this figure has been attained. So this figure will be attained in a downtrending market. And once it gets to this trigger point, you can see here it's called the trigger conditions. Once it gets to this trigger point, then it will create the stop loss order. So what I'll do is I'll increase this and I'll draw in my take profit point and my stop limit points. So on this graph, I show the 15% take profit, which is taken just above the line of resistance. Because if you look at this wick and this wick and this wick, and if we draw a line right there, it gives us a line of resistance. And so once price action breaks above this line, we'll make it a different color. So this orange line gives us a line of resistance because we can see that right on this wick and this wick, as well as this one, all three of them hit this orange line, but the orange line resisted price action going above it. So to be on the safe side, you could decide to take profit below the line of resistance, but the strategy I usually use is once price action breaks above the line of resistance, then I want to take my profit at that point. But usually it's safer to take your profit just before the line of resistance, because there's a likelihood that price action is resisted at the orange line, which would lead to a downward trend. Our support line is the purple line, because if you look at it, you can see that most of these candlesticks kind of sit on this line, and that's how I drew this line of support. And so because if you look at the previous candlesticks, they come down to the purple line and bounce back up off it. And so there's also a chance that price action would come down to the purple line and bounce off it as well. I only want my stop loss triggered once price action should break through below the line of support. Then I want to play safe by exiting the trade. Well, that's all, folks. I hope you've enjoyed this video. And if you have, the only thing I ask is that you like the video, drop a comment below, let me know how this video has worked for you and what other content you'd like to see me create. Share with your friends and family. Subscribe to my channel and don't forget to hit that notification bell. And I'll see you in the next video.